All right, good morning, everyone. Good morning. Yeah, thanks for the good morning to the Beyond Charts Morning Brew. Thank you. Wow, this is early, but anyway, thanks, Josh, for the thing. I just got your text. Normally this is done at 8:30 on the East Coast, but somehow my computer messed up and it's 5:30. So we're going live on TradingView and um, uh, YouTube. All right, guys. All right. So new week, new start. It's gonna be a short week. So yesterday was a very short. The markets, the E-mini markets are open, but the overall market was shut down. But let's get to it today, and let's find out where the plays are. So I think that the S&P 500, as I dove deeper this weekend, I believe that we're setting up for a range type of day, and we're kind of we already put in the bottom range. We just need to know where exactly is yeah. Yeah, exactly. And we just need to know what's going to be the top range. My suspicion is the top range is going to be around 4,200. And so far, that has proven to be accurate. So we're seeing if that's going to hold. But I think that they were probably going to be range bound there today. Yes, Josh said you do that every day. Yes, I know. I did it here for many years. Adapt pretty well. But I was in bed by 8:30 when I'm out here. But it's, a little sacrifice, but it's worth it because you're done at 1 o'clock. All right, so let's get to it. Let me get rid of myself. Things that we have to worry about this week. Let me see if I can get into things that we have to worry about this week. Go to my Twitter account here, and let me see. Okay, so things we have to worry about this week. I believe I just posted on Twitter. Let's dive into it right now. So you have basically manufacturing on Monday. That was yesterday. Those came out a little weak. I think that's why the market sold off about 4,200. Let me see here. A Bank of Canada rate decision. I mean, you should be considered that they're going to raise rates or lower rates. That would help. Fed Williams is going to make some remarks at 11:30. Remember, anytime the Fed governor speaks, you have to pay attention. It will move the market in some capacity. That's going to be at 11:30. At 1 o'clock, you have Fed Bullards, and these times are going to be Eastern time. Okay, these are all Eastern time, so they're going to be during market hours. You got Meister discussing some Fed at 1 o'clock. So just interesting, right? Just after lunch, you got initial jobless claims, and then we have the non-farm payrolls. That's going to be something we're going to be looking at. And then the crude oil inventories. These are the two that I think this week could move the markets in some capacity, as well as the Fed speaking. Remember, we have done this before. The remarks seem to be very type of dovish when the markets are at the lower end of the range, which in this case we've noticed it was 3,900, and on the top range they tend to be a little bit more hawkish, which I believe we're coming closer to the top. I don't know exactly where is the top of this range, but I think we're closer to the top than the bottom. So let's see how this rolls out. As far as today, what are we going to be looking at? All right, so a couple of things here. Number one, we always start off with the overall markets to find out exactly where they're at as far as like what's part of the swing. Overall, we're looking at the S&P 500, the NASDAQ, and the Russell, and the time frame of the daily. So based on a lot of information here, we're looking at basically that we are in a bear market, okay? Now, there's two school of camps out there. There's one school of camp that says, but basically you're in a bear market when you break 20%. Well, we did break 20%, and we broke it for like briefly, right? I think it was for a day, and then, but I've been calling the bear market since back then because if you follow me, I follow the 50-day moving average, and we called it back in January. Now, it's up to you. It depends, but overall, we are making lower lows and lower highs, which to me defines a bear market. Now, as far as how high do we go, here's a range-bound day. There was a lot of buyers that came in around 3,800. So 3,800 is going to be the offshoots. I do believe that 3,900 is going to be a much more solid floor. Now, there will be offshoots down to 3,800. Just remember that it might not break, okay? It might just a lot of buyers coming in, it might bounce back off at those levels. So that's what I mean. So 3,900, it's going to be solid. Now, how far do we go? Now, it looks like it probably wants to go to this 42, 4,300 on the high range. Now, we did bounce off the 4,200. Let's see if that holds. But just know 4,300, it's not off the table, and that's right around the 50-day moving average, and we can stay in this range for quite some time. Now, here's a great thing. The good thing is we identified the ranges, right? Great. Now we can trade accordingly, and we can set up our trades, but let's see a much more clear definition of the upside. Now, the MACDs did tell us that we were going to bounce. So we did bounce a little up here. It started this momentum swing. It just started. I don't know how long this is going to go. Let's see. But right now, overall, the lines are below the zero line. That is a bearish bias, meaning that until it breaks above the 50, it's probably not going to be above this zero line so anytime soon. But right now, the E-mini futures are at 41.27. Let me tell you where that's going to open up. That's going to probably be around here. Okay, so we're bouncing off that 4,200 level and probably going to go a little lower. All right, the Nasdaq is bouncing as well. And again, same type of thing. It's going to be range bound. So what I mean by range bound is this. This is a range bound event, and this lasted for about a couple of months. So that's why in the Patreon I said it probably lasts for maybe a quarter into the fall. So this is what I suspect. More likely we're probably going to be range bound going into the fall, the same way that we did range bound here. I don't think that this is, I think this is his definition of the quote unquote soft landing. Okay, soft landing, meaning he's not going to go crash the market directly down, but I think that the goal is to bring back money. The goal is to slow down the economy as much as possible, taking it a step by step by step. But here's the thing. I don't believe that things are going to go higher because there's too many, there's a lot of objectives that we have to meet, and we are not meeting them. Okay, slowly but surely, I think that we are at all-time highs. I don't think we're going to see anytime soon. Okay. As far as the Nasdaq, Russell is leading the charge. Remember, the Russell is the overall market, and with Russell going higher, that is usually a good sign. Now, key things to look at if you're going to be a bear. You want to be looking at Apple. You want to be looking at Goldman Sachs. You want to be looking at Tesla. If those three are not red, the S&P is not going to go down. It's just very difficult for when banks are up for the S&P 500 to go down. So if you're day trading, you see Goldman Sachs up $10, S&P is not going to go down. Just know that and know that. Okay, so let's go in there. Now, this weekend we did discuss a little bit about risk profile and trading. Want to get that's going to be a subject. It's going to be hitting hard, especially in the beyond charts trading system, because it just eliminates and makes it more realistic of the expectations that you can do. Now, you have to also, once it also takes away the emotions, and one thing is for certain, that we also are going to now trade accordingly, your position size to your own risk profile. Now, what I'm looking at here, I'm also looking at the E-minis, and this is something we look at. The E-mini is going to give you the overall futures of the market. Remember, these trade close to 24 hours early. They were open yesterday as the overall market was closed. So that's where we're going to see a big gap up or gap down in the S&P 500. But clearly you can see during the Patreon group, we talked about this swing system right here, and it was still going down. We're still swinging down. We're broke below zero, and we broke below the 50. So more than likely, we're probably going to hit that 4,100. But as you can see, when the China PMI came out at 4203, we quickly sold off. So again, how did the market react to it? It reacted negatively. So now we're selling off, and we're finding the top peak. Maybe, right? So now we know where the bottom's at. The bottom's at around this 3,900 if I were to zoom out, and the top is around 4,200. Still selling off, and we haven't stopped. It's just still on the 50-minute time frame. We're still going down, and on the 1-minute time frame, we have these fluctuations forming lower lows and lower highs as this is just continue going downward. So maybe the 1 minute is going to give us some heads up, but right now going into the market's at 539. We have about another 30 plus 20, 50 candlesticks right now. What is this going to prevail? What is this going to look like? It looks like it's probably still leveling off. And so what are we going to do? We're just going to chill, hang out, and see how this forms. Ideally, what I would like this to do is come up to the 50 and set up for us nicely. So let's see, and let's see. We're pretty far away. This just started, and this can maybe continue, but let's see. It's probably going to linger in this area for a little bit until the American cash open. The cash open is the biggest opening in the world, and we're going to see what happens there. All right, let me see. So does that mean you start the day with a put? No. No. We're just analyzing the market right now and finding out what is the best scenario for us at this moment. This is what we're doing right now. So as far as wait and see, you're going to be looking and analyzing the market right now and find out what exactly is going on. This is going to change. We're noticing that the pullback is going down. MACDs are going down, and this is going down. This is all going down. Nothing is really setting up at this moment. The only exception is this. We only have one on the hourlies, and now we're waiting and seeing to see how below this market's going to go. We still got about 540. We still got about 20 plus 30. We have 50 candlesticks or 50 minutes on the 1 minute. Let's see how that plans out. We're looking for squeezes. We're looking for a better setup, but this is now rallying down. The setup was actually right back here at 8:30, and then there was another one back here at 8 o'clock, and that was all yesterday. So as far as today, it's selling off, but then we're selling off around that 4,200. Let's see what happens. As far as the VIX is climbing, and again, we talked about this yesterday. The VIX hit the lower range and it's climbing. So right now it looks like it's bouncing. So based on the VIX, knowing what's happening here, and we're selling off that 4,200, let's put the pieces together. 4,200 is the top side so far, and the VIX on the bottom side is 25.6. This is where we're noticing fear is bouncing, and maybe fear is coming back into the market as the market is declining. So that's what we're looking at. Treasury notes are climbing right now. Remember, as the Treasury notes yields were coming down, then the market went up. But now Treasury notes are having a little bounce. They're at 2.8. If this starts climbing, that's also going to help with the overall market declining. So just let's start putting the pieces together. As far as overall, what I'm looking at, let's look at Bitcoin. Bitcoin right now is also declining. If you want to follow Bitcoin, I've been saying this 100 times, do not look at Bitcoin by itself. You want to be a better trader. You want to be looking at, you want to get a better insight on Bitcoin or your Ethereum, you're going to have to look at the S&P 500. I know you guys don't like looking at it. I know that you guys think that Bitcoin is a mother god of his own. It's not. It's still following the S&P 500 and the NASDAQ. Basically, that's it. That's your inside secret to trading Bitcoin. Look at the S&P 500, study it, study the NASDAQ, and you'll have an inside tip on Bitcoin. Okay, so right now, Bitcoin is still following the S&P 500. If the S&P 500 is going to have a negative day, Bitcoin will also have a negative day. Now, remember, we do have two key events at risk-on this week, and that's going to be on Thursday and Friday. That we're going to have to pay attention, because that will move the markets. And remember, anytime the Fed governor speaks, we know the playbook. We've studied them before. Anytime we're on the top of the range, they speak very hawkish, meaning that they're going to have to raise interest rate. They need to peel it off. They need to do all this stuff. Inflation is running really, really hot. And then at the bottom of the range, they speak very dovish, meaning, oh, things could get better. Inflation is peaking. Yada, yada. You guys know the playbook. If you study the news, just look to see what they said at certain times of the range. Okay, as far as where are we looking at? We're looking at the overall markets here, and we're looking at some high probability trades. So NVIDIA is selling off at this moment, Mercado Libre, and we have Shopify. Maybe Shopify may be 1-4 puts. We'll look at that as well, because and Netflix is selling off at this moment, pre-market. Let's look at the overall markets and find out what's going down here. Google peaking, so it's also peaking. You have Amazon peaking, and you have Tesla peaking. Now you also have Apple and CMG. Okay, so everything kind of needs to pull back to the 50-day moving average. Let's see what happens there. As far as the SPY, let's look at Tesla. Tesla's rally really, really nicely, 766. It's probably going to peak at some moment of time. It does need to pull back to this 50, which I suspect is probably going to go down to 700 at some moment of time, and see what happens there. Let's look at Apple, because that's going to be a big one. And Apple also is coming down. Probably we hit the 150. All right, that is big. So I don't think Apple can trade above 150. Now, here's the thing. As I said in my Patreon group, if Apple breaks above 150, then I think that the market maybe has bottomed. But I don't think that Apple's going to trade above 150. I think it's going to stage in this range bound. We know that they bought it at 136, 135. But Apple will stay in that range bound. Same thing with Tesla. I think Tesla above 800. You'll notice now that the optimism is back in the market. Until then, I don't think that we're going to see that. We're going to see range bound. Remember, we also have earnings coming up at the end of June, July, and that's going to be a new session. And I think that based on all the information that's been given out there in the news on what the company's been saying, is that companies, I think the market's probably going to wait and see overall and stay within a range. So that we have it. Also, we also have to think, though, there's a big event coming down the road. The big event is going to be that the Fed is going to start unloading their balance sheet. So meaning they're going to start unloading and selling off and putting a lot of selling pressure on the market, which is going to bring up yields. Remember, that is a big event, and we also are going to wait to see what happens. Now, is the market suspecting they might pivot? Maybe. But we already know their playbook. Maybe they'll pivot at the bottom range of 3,900, but they're probably not going to pivot at the top range of 42 or 43. That's my suspicions anyway. All right, so Apple right now is selling off. Let's look at what's looking at the Spider. Spider is, do I have a Spider? XPX. That's this one. Okay, so I do have two XPX, which I don't need, but we definitely need a Spider. Okay, let's look at spiders. Okay, so Spider right now is selling off at 412. So we've hit our head around that 417, 4171. More likely, we hit our head around 420 to be exact. But the Spiders also, they do their best to trade pre-market, aftermarket, but they didn't trade yesterday. So you're not going to get that 4,200 because we hit it yesterday on the E-minis. So we're not going to get that. But just know that we hit 420 on the E-mini. So this is going to give you a little better insight. And just know that 420 was on the table. It hit it and it got sold off. So 420 was somewhere in this range right here. Right in this range. So now we are selling off. Let's see what happens. We have about another, again, 30, 40 candlesticks. It looks like it's trying to base. Let's see what happens. Right now, pre-market, the highs were right around that 416. We sold off. If we take out this 411, more likely we're probably going to get a lower, but maybe not that much lower, because this is now will be an exhaustion sell in this time frame. How low can we go? More than likely, we're probably going to go to this 410, and then we'll see there if it's consolidates. Now, on the hour charts, we are just getting a fresh MACDs to the downside, which will probably put us around 404, which it's equivalent to about 40, 50, which is equivalent to 40, 50 on the E-minis, which put us on the bottom range of Monday on Friday, which is doable. That is doable, but let's see. All right, so you got the S&P 500. I would like to see for a better setup. I'm looking for this thing to either come back, come up, squeeze, and give me a better setup. But right now, on the 50-minute time frame, we have some bearish bias right now at this moment of time. We're starting this leg down, coming down, and then more likely, I would like to start to rally. Let it rally up a little bit more. Let it rally into the open, and then that could probably set us up here, and then we'll figure out which way the MACDs are going to go, which way the moving averages are going to go, and then trade accordingly. On the table, we're probably going to have, let me look at the dates. On the table, we are going to have June 10th. Now, today is Tuesday, so it's very close to tomorrow, which will probably be adding June 17th. So it's up to you. I'm probably looking at both. But if you want to trade, June 10th works. June 10th works. So we're probably going to be looking at on the bottom range about 390, 380, 390, 380, put somewhere in there. Add the 385s and see where they're going. They're probably going to be within the $1.50 range. On the top side, we're probably going to be looking at 430 to 440 for that range. So just keep them on there. As we go down, we're going to lower those calls. As we go up, we're going to increase those puts because we want to follow suit. But that's for today, right now. I think that's going to be the two that we're going to be looking at. All right. As Qs are go, let's look at the Qs. The Qs are now going to be like Qs. All right, the Qs, same type of thing, are going to be selling off a little bit. Let's see what happens here. And the Qs right now are selling off. They're going to be coming down and same type of thing. So same type of setup. I think that this is probably going to rally into the open. Let it rally. It's not going to rally up. It's just going to set us up and see what happens there. And then we'll probably get a better setup in the 15-minute time frame, and it's going to tell us whether this is going to come back down to the 50 or is it going to linger up here for a little bit before we go higher. So let's see. The next one that we have is going to be IWM, which is a Russell. And IWM, I'm looking at coming to the end here. So I suspect we're probably going to rally. This swing is probably going to end and let it set up right around that 187. And then we'll see, and we'll see. The hourlies are showing me some weakness. It's just started. So this is going to consolidate first and then pick a direction. It's probably going to go down. That's if I had to guess. But we're going to wait and see to see where the momentum is taking us, right? But that's what I'm noticing right now. There's more weakness, but it's going to go back up a little bit. And let us see if we can get a nice setup here at the open, if IWM. So again, we need to look at the overall markets, and that's what SPY is giving us as well. So rallying up right now. Let's see. So is today going to be a trading day, a range day, or a trending day? We'll see. All right. So looking at questions. Would it make sense to look at the 17 for safety since something big is happening on the 15? More likely to turn around. Yes. So that's another reason why also we were looking at the 17 is for that one as well. Thank you, Josh. There's a big event happening on the 15th, and that big event is the Fed coming out with their statements on what exactly they were going to do. Now, if they follow suit, more than likely, they're probably going to say they're going to start unloading their balance sheets. Now, the off note is, if they change their mind and they say that they're going to any verbiage, remember, they've been delaying unloading the balance sheets for a month out, right? Think about it. If you said you're going to do it, then do it, right? They haven't done it. They've been saying they're going to do it, and they keep delaying it. They keep saying, we're going to do it next month. Oh, yeah, I'm going to do it next month. I'm going to do it next month. All right, guys, you know exactly how that sounds like. Have you ever tried doing something they didn't want to do, but you keep delaying it and you say, I'm going to do it tomorrow, 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 tomorrow. What does that really mean? Let's study psychology. It really means that you really don't want to do it. And you really don't want to do it. There's not a lot of conviction you want to do it. Well, it's the same way with the Fed. The Fed is a kid, and they keep delaying it. And the market's recognizing that. So again, the only risk that we have, and I think that if they delay it another month, the market could possibly take that as a positive and rally for a day or two. It doesn't mean that's positive for the overall market. Doesn't mean that is going to be like, we're back to being bullish and all-time highs. No, it just means that move, the market might react positive because now they say, oh, okay, so they're delaying it again and they're revealing their hands. So we'll see. But if they go through with it, I think that you'll probably see a little reaction, but I think it's already been priced in and will just stay range bound. Okay. So, all right, guys, that's it right now. Just wait and see. Let's see how this rolls out. Let's see what the overall market here. Google's back down to the 50, CMG, Apple right at that squeezing method at 148. Watch it above 150. Tesla, watch Tesla above 800. If it goes above 800, Apple goes above 150, I think that there might be more bullish biasness, and we can probably test the 4,300 range on the S&P 500. Right now, we're up to 42. Just keep that in mind. So the range I'm giving you guys is 4,200 to 3,900 with offshoots. to maybe 43, and offshoots down to 38. So keep that in mind and watch that. All right, guys, that's all we have. That's what we're looking at. And stay frosty. Go out there, go get it. And again, I'll see you guys in the chat. If I see anything juicy, I'll be setting up my trades. And remember, Wednesday we'll be having a discussion, which is tomorrow. Please watch the Patreon video if you're a member, if you've been looking at it. And then on Wednesday evening, we'll have another discussion about 1 hour only and discussing position sizing, risk profile, how to utilize it correctly, and going slow and building your accounts to where you want them to be. And also how to put a process in so we can now start taking money out of the market and start building other accounts. All right, guys. Go out there, go get it, go get it, go get it. I'll see you guys in the chat. And all right, we'll see you soon. Bye-bye.